If you could pick 3 things from your accounts to determine whether your business is successful, which would those 3 be? In this video, I'm going to show you 3 items on your accounts that can determine whether you've had a successful year or not. And why should you trust me? Well, my name's Izzy, I'm a chartered accountant and I've been in this space for over a decade. In that time, I have seen some of the biggest transformations in the way that businesses manage their finances, and I have watched how those who embrace those changes have seen a positive impact on their businesses. So number 1 would be turnover. So what you want to see is, how does your turnover, how does your revenue, your income, whatever you're going to call it, compare to the previous year? Has it gone up or down? And even if it's gone up, at what rate has it gone up? Has it gone up above inflation, or at inflation rate, or below inflation rate? Because if it's only gone up in line with inflation, then it hasn't really increased. It's effectively the same as the year before. If it's anything below inflation rate, then it's less than the year before. Turnover is vanity, profit is sanity. So the next thing you want to check is, what's your profit looking like? If your turnover has changed, has your profit changed in line? Ideally, if you want to see your business being successful, you want to see that your profit's gone up too. If not, your turnover's gone up but your profits hasn't gone up, then that's a clear indication that your revenue isn't going up in line with your costs and things are catching up. So if your turnover's gone up, tick, and your profit's gone up, tick. Well, let's then go and look at the cash at the bank. Has the cash at the bank increased from last year in line with your profit? If not, why not? Because if you've made a profit, surely that profit would be in your bank. Obviously, not so straightforward. So, if your bank balance hasn't gone up, then it's time to look at some other things. Firstly, what you look at is, has your drawings as a business owner gone up? And what I mean by that is, have you taken out more money from your business as a business owner this year than you did last year? If yes, that's not a bad thing. It means you've earned more money and you've decided to spend it on yourself. But at least we know where the money's gone. Now, if you have taken the same amount of money or less than last year, and you still don't have more money in the bank despite you making a profit, then it's time to look at a few other things. So firstly, we're going to look at your debtors. So that means, what do people owe you? And that includes what your customers owe you on the work that you've done for them. If that number is higher than last year, then that means you've done work for people, but they've not paid you yet. So you want to start getting that money from them, because otherwise you're at risk of them not paying you, and then you've effectively done the work for free. The next place to look at is your creditors, liabilities, loans, whatever you're going to call it. The creditors includes payments due to the suppliers. So, are the amounts that are due to your suppliers now less than they were last year? If that's the case, what it means is that you've used that money to pay off your suppliers. Or maybe you've used it to pay off the loan or any other debts that the business had. Again, this is not a bad thing necessarily. It's just worthwhile knowing so you have clarity on where the money's gone. Because nothing worse than seeing on paper you're making a profit, having a taxman asking you to pay tax on that profit, but not actually feeling that profit in your pocket. Start to finance, scale to your business.